Well, hello everybody, Michael Silva here. You're watching the Stock Market Brief Show. Today's episode, it's going to be quick and to the point. Look, it's all about not looking too far ahead. We're going to map out some key levels to keep us focused on for the trading days and potentially week up ahead. All right, it's a very foggy looking future. It's hard to see through all these clouds right now, and it creates a lot of emotion. It creates a lot of opinions, and the only opinion that really matters is the stock market, the price. What is price doing? Because this is the opinions of everyone and everything that trades within this market. Now, we did have PPI data come out today, hotter than expected. Okay, the market, what happened? Well, it started to rip into the downside. And then when we opened up, we saw some chop and we started ripping up and then we fell back down. Okay, it basically, in a quick short film, a short way to look at it is the market opened up. The bear was peeking in on the daddy over here. And he's like, yeah, I'm doing hecka good. Everything's fine. And then when he came back a few seconds later, Coco was in his chair and just destroyed the entire market. Everything from the 11 sectors was down on the SP 500. However, consumer staples and utilities led the way, even though that they were down, which is defensive posturing setting up. The Dow Jones was down 1.26. The SP 500 was down 1.38. The NASDAQ was down 1.78%. You know, we showed the Bookmap levels yesterday, and I love this software. For trading intraday, it allows you to see basically level 2 data and it heat maps it on there. So it gives you really good areas of liquidity that you can, act as support, resistance, or potentially play breakouts with. And what we called out was basically this line over here between 41.10 and 41.15, and we saw some levels up here and then also down here. But I want you to pay attention here. This was from yesterday's deck, 41.10 and 41.15, and look at where price opened up. Price opened up right here, okay? So this is the start of business, and you can see, boom, we opened up right where that 41.10 level is, and it started finding support there as soon as it reclaimed that VWAP, which is that white line as you see. Okay, now where did it go up to? It came up into this level, 41.45, and this is, I'm highlighting this right now because going into tomorrow's trading session, take a look at 41.45. This showed up, okay? This is the close of business right here, okay? And then this showed up a little bit afterwards, this level right here. So 41.45, we want to keep an eye on, 41.60 up ahead, and then below us, 40.75, this was from yesterday, and this started heating up quite red too. So start to be on the lookout for this to potentially get filled as well or hold as an area of support. Another level that opened up there is 40.55. Now, you might be wondering, okay, what's going on with the market? What's going on? Well, it could very well be because the market's reacting to this PPI data, right? It came in hotter than expected, meaning what? The Fed probably has to continue raising rates. And we discussed that on yesterday's brief, which we found odd because yesterday the price action was pretty bullish, albeit on some distressed looking volume, but the market didn't respond where we saw June all of a sudden showing, whoa, the rates, the probabilities are now favoring 5.25% for the federal funds rate. And that was not there recently. So this was all new to us. And now the market is, responding or pricing that data in. You can also see here the Fed balance sheet also reducing here as well. That got updated. But overall, right, whether you're bullish or you're bearish, to be quite honest, if you just zoom out and look at the picture of the last 11 to 12 trading days or whatever this is, I mean, just take a look. We're in a chop box. It's just chopping back and forth. And this is one nasty candle on the day, how we gapped here, but we went all the way up and everyone's all celebrating. Oh, see, it is a bull market, big everything. And then it just reversed on us. That's what we're living with. That's what we're dealing with. Jim Carroll tweeted this. He was like, hey, he had mentioned, he says, yeah, this looks like a total bull market, but all he's doing is taking this chart basically and highlighting the swings, right? Down 1.8%, up 1.4%, down 1.5. It's just down 2, up 2, down 1, up 1, and so forth down the screen. It is incredible chop. And you just layer this on with just this insane speculation in the options market. This is SPY 0-date options for today. Just take a look here at this strike for 412. There is 457,000 contracts traded. That is ridiculous. This is an incredible amount. Now, no way that this is just your average retail trader over here either, because this is just an incredible amount of contracts being traded. So people are still trying to figure this out, but all it's been creating so far that we've been seeing is just a lot of this, foggy type behavior in the overall market. I took Tesla too. We have a big option expiration, right? It's like 1.8 trillion, I believe it is, expiring tomorrow. And you can see here, like, look at this strike right here. So 220 was 300,000. 215 strike was 258,000 contracts traded. This is incredible amount of contracts being traded there in the likes of Tesla. So it's going to be interesting to see how this obviously plays out on this expiration and going into the following week. Now, if we take a look at the SPY on the 15-minute time frame, right, a lot of choppy price action. So if you were able to make money in February, congratulations, because this is the first over here, and we've just been doing this basically, you know, the entire month to date so far. And now I want to call out a few things, right? So this right here is highlighting just this week. So we did tag a new low on the week. All right, tagged a new low on the week, but we didn't, you know, actually we had a closing low on the week too as well. But you can see we've been seeing this price action where it comes way up and then it gets faded. It comes up and it gets faded, but then it also comes right back up, right? Comes up, gets faded, comes up, gets faded. So there's a pop-up possibility that we still move to the upside again, right? We have a 31% vol tomorrow, which is 4.89%. in the S&P 500, which means what? It means that the upper level is 413.12, which is, you know, right around here. Okay, which is basically the high of today. And then we have 403.44, which is 403.44 would be probably right around in this range over here. Okay, so as these work, you know, think of them as that bell curve, right? You have a bell curve, you know, 68% of the time, you know, is one standard deviation, and 68% of the time right here, the S&P 500 closes within this type of range. So I would expect price to close somewhere within this range. Now, also be mindful that, hey, the market priced in a lot of volatility for the week. It priced in up to 418 and all the way down to 397. And we haven't actually had a tag of the weekly expected move as of yet. So what should we be careful for going into tomorrow's trading session? The key levels, right? Don't look too far ahead. Actually, before we get into the levels on the daily time frame, I want to just point out here really quickly is we are below the week-to-date anchored VWAP. That's the blue one. We're below February's anchored VWAP too. Both are flat to neutral. They're not really trending as it stands right now. And then the purple line is the 5-day moving average, also neutral. So there hasn't been really a trend. So this, I don't hold too much weight to this other than it is overhead potential resistance. But if it does start moving down further and these start coming back down, okay, then, you know, then be a lot more careful, because then we start to see trending prices heading down, like within the anchored VWAPs is what I'm talking about there. Now, as far as key levels of not to look too far into the future, right? People are forecasting what's going to happen at the end of the year. Let's keep it simple and just look at a couple levels to pay attention to for both the bulls and the bears. So as far as bearish goes, right, we are in this chop box. So bearish, if we start cracking this low right over here, right, that opens the door for the year-to-date anchored VWAP. Now, what do you do if the price comes to this year-to-date anchored VWAP? Okay, so this is the daily time frame. All right, so on the daily time frame, if price comes down here and you notice that, okay, what you do is you can go into the shorter intraday time frames, like the 10-minute, 15-minute, 5-minute, 2-minute, whatever the case is, and see how price responds to this area. Okay, you don't want to just buy it if price tags it, right? You can get lucky and then it can bounce up, cool. But if you're looking at the intraday charts, what you want to see is, right here is, let's pretend this right here, this line right there is the year-to-date anchored VWAP, and price is going to come down to it, okay? And maybe it tags it, maybe it breaks through, but what you want to see on the like 10-minute chart, 5-minute chart, whatever the case is, 2-minute, you want to see it, potentially do something like this and build a base, right? Or whatever the case is, and then say, okay, now it's starting to bottom out on the smaller time frames. Now I'll start to buy as it breaks back out, and then it's showing proven strength on the shorter time frame, which allows you a little bit more confidence to go long. But just buying, if it just tags this, could be a bit dangerous. Now, as far as the bullish perspective goes, we can start to look out for this downsloping trend line to get broken, or this prior high right here. So still, it leaves a lot of room for chop. If you want to have like, well, I don't want to wait for it to break all the way up here. Okay, well then yeah, do this trend line here, or try to take out this prior swing high in the shorter time frame right here. If it does do that, that opens the door to head higher. If this breaks down, it opens the door to head lower. We got to just keep it simple. If you take a look here on the S&P 500, right, we've been trying to do this out a long time ago. 3,900 is a key level, 4,200 level is a key level, right? We broke out, we said over here, a strong probability we hit 3,900 again. Boom, it came back down and hit it. And if it starts catching back up, okay, start looking for 4,200. Bam, we tagged it. Okay, so if it starts coming back down, where do we look? Well, look for that lower weekly expected move area. The 200-day moving average is starting to curl, potentially 4,000, 3,900, but there's nothing structurally broken if it were to come down even into these levels, okay? So, you know, we got to look at this as potential opportunities to go long, but you just got to do so very tactically. Now, as you can see here, the volume today picked up, right? So this is a distribution day on the S&P 500. And if we look back, we're looking at roughly 3 trading days now of the S&P 500 creating distribution days. And when this creeps up, like from Bill O'Neill, you know, more to 5 to 6 distribution days, then, you know, the likelihood of a stronger move down could very well ensue. If we take a look at the weekly time frame right now, also to note, right, we're just still trading within the prior weeks. So this current week is trading in with last week. The last week is trading in with the week before that. And we are still above a 5-period weekly moving average. On the other news, the 10-year yield continues to bounce up. Now it is coming into this over prior head, over potential resistance that we can watch out for. TLT has been getting hit pretty hard. I'm looking at the zones on, I'm not going to share them with today, but I will share them with the Patreon group. TNX is reaching up to its higher level. TLT is going down to the lower level. So if you want to be more bearish here, this has to start curling back around and so forth. But as it stands right now, it's just kind of just trucking along, which puts pressure on growth names. The dollar didn't do much today, but yet the S&P 500 did get hit. So if the dollar backs off, maybe this is just going to continue to be in its little chop box. If the dollar starts, you know, hitting higher to the upside, that could put more pressure on assets like gold. It could put more pressure on the S&P 500 as well. To the summation index that gave us 4 days now of a heads up that we can see price action potentially start to take a turn. Well, I think it's paying off right now. Now the trend hasn't really adjusted or changed. It's really just going sideways, but this starting to curl over and this catching up gave us insight that, hey, we might want to take the brakes or take our foot off the gas. And sure enough, you can see that the consolidation is taking place. So is this going to pick up to the downside and we're going to see more steam? It's a possibility. We got to watch out for it. I will note that if you look at growth to value, the rate of change on the 10 period did cross down through the 0 line. The last time that did that was right here, and we saw a pretty big move to the downside over here. It was a quick one, it moved to the downside, but then up. The big one was right over here where it crossed down through it, and then we saw that big trend change in the overall markets. And then that one right over here in December too, you can see right in December, it was right here that kind of crossed down through it. And then over here in August, if we go to August, that was right here during the same time. So we're getting, you know, a summation change as well as the rate of change over here. So, you know, we'll see here the market can, if the bulls can step back up. The NYSE summation index over here has ticked over for about now 5 trading days. We're starting to see it stronger pull to the bottom or pull down, which could very well break this consolidation up here. Could potentially break this wedge that we've been pointing out for some time too. There's a tight, rising wedge structure. So if this starts breaking down, we can start looking at 15,000 or so over there. That's all I got for you on today's episode, everybody. If you want more type of content, you can come into the Swing Trader on my Patreon. I only charge $9 a month. I give trade ideas. I give a lot of different charts that I look at. I look at a lot of charts, people. I look at thousands of charts. Weekly, I look at thousands of charts, right? All throughout the day and then all throughout the weekend. Weekly expected moves. I give, I track 40 products. I even explain how you do this yourself, right? But I track 40 products and I share them every week. I give updates on the zones, which is a whole bunch of products. And I do this all for $9 a month. You also get access to obviously the community. If you don't like paying monthly, I get that. I just say annually. You pay $90 and you get an entire year. Once you sign up through Patreon in the link below, you got to sync your Discord up to Patreon and then you get access to the Discord. That's where I post everything, is just in there to keep it all just is easy to manage. That's all I got for you, everybody. Have a wonderful night.